Hello everyone, and welcome back to the channel. Right now, a massive shockwave is ripping through the financial markets, leaving both institutional giants and retail traders absolutely stunned. A piece of corporate news has just crossed the wire that we typically only see once or twice a year. On one hand, a major strategic move has lifted an investor payout straight to an astonishing 12% level. But on the other hand, a literal tidal wave of liquidity is being unleashed onto the market, backed by a staggering $1 billion. Yes, you heard that correctly. A massive $1 billion share buyback has just been authorized. But hold on a second. This story isn't just about an insane amount of cash. If you look closely at the headline currently making waves across financial networks, there is a hidden mystery, a massive technical contradiction that the average investor is completely missing. On one side of the alert, we see the prominent logo of MicroStrategy, a company world famous for its massive Bitcoin treasury. Yet right next to it, the text explicitly names a completely different ticker symbol, STRC. What is the real story here? Is this a highly confidential new corporate move by MicroStrategy? Or has a massive automated glitch just misled the entire trading world? In today's deep dive audio breakdown, we aren't going to rely on flashy visuals. Instead, we are going to use raw data, corporate actions, and financial logic to dissect exactly what is happening. If you have hard-earned money deployed in the stock market, you cannot afford to miss a single second of this analysis. If you are new here, make sure to hit that subscribe button and turn on all notifications right now, because you will not find this level of real-time market investigation anywhere else on the internet. Let's first break down the very first component of this breaking headline, this massive 12% payout lift. In the standard investing world, when you allocate capital into a solid, stable corporate equity, you typically expect an annual dividend yield or payout rate of around 2%, 3%, or if you're incredibly lucky, maybe 4%. So when a corporate management team suddenly steps up to the microphone and announces they are elevating their payout into the double-digit territory at 12%, it immediately sends shockwaves through the entire financial ecosystem. What does this actually mean for you as an investor? Let's explain it in plain, simple terms. It means that the direct cash flow or yield generated from holding this asset is about to experience a massive, unprecedented spike. Historically, a corporate entity only pulls a lever this aggressive under two specific scenarios. Either they have launched a highly lucrative underlying business strategy that is generating an immense amount of immediate revenue, or they are trying to fiercely protect their investor base and incentivize shareholders to hold the line. However, there is an old saying on Wall Street: there is no such thing as a free lunch. If a payout is scaling up to 12%, we have to look behind the curtain to see how it is being funded. Is this tied to a high-yield derivative product structure? Or is the company aggressively monetizing its internal assets? Until we resolve the underlying identity of this stock, we cannot fully exploit this move. What we do know for certain is that this double-digit yield sounds incredibly attractive, and it has already caused a massive spike in volumetric trading activity over the last few hours. Now let's pivot to the heaviest, most impactful portion of this breaking alert: the $1 billion share buyback authorization. Look, $1 billion is a monumental amount of capital for any corporate board to deploy. When a company formally announces that they are ready to spend $1 billion of cold, hard cash to buy back their own stock directly from the open market, they are signaling three critical corporate finance pillars that every single investor must understand. Pillar number 1: absolute corporate confidence. When the board of directors and their inner circle of financial advisors look at the market and realize their stock is trading at an unjustified discount, they step in. By buying back their own shares, they are shouting to the world that they believe their own company is the best, most undervalued investment available. It is the ultimate bullish signal. Pillar number 2: supercharging earnings per share, EPS. When a company repurchases its own shares from the open market and cancels them, the total number of outstanding shares circulating in the wild decreases. Suddenly, the company's net profits are divided among far fewer shares. This mechanically and automatically inflates the value and underlying ownership power of every single share left behind. Pillar number 3, optimal capital allocation. If a corporation has billions of dollars just sitting idly in a bank account, that capital risks being heavily taxed or depreciated by inflationary pressures. Reinvesting that massive cash pile directly into their own equity is often the most efficient way to reward loyal shareholders and drive the stock price higher. When you pair an ultra-high 12% payout with a monstrous $1 billion buyback safety net, you create an incredibly potent catalyst for an exponential rally. But this is precisely where our corporate mystery thickens, and it's where undisciplined retail investors risk losing a fortune. Now, I need you to listen incredibly closely to what I am about to expose next, because almost every mainstream financial page on social media is blindly reposting this headline without doing their homework. If you carefully examine the screenshot of this corporate news aggregator alert, you will notice a massive red logo. That logo belongs entirely to MicroStrategy, MSTR. MicroStrategy is the macroeconomic juggernaut led by Michael Saylor, globally renowned for holding billions of dollars worth of Bitcoin on its corporate balance sheet. Whenever MicroStrategy makes a corporate move, the entire crypto market and traditional stock market move with it. However, if you shift your eyes just a fraction of an inch to the right of that red logo, the actual text of the headline reads, "Strategy lifts STRC payout to 12%. Do you see the massive contradiction here? STRC is a completely separate equity listed on the market, whereas MicroStrategy famously trades under the ticker symbol MSTR. In the fast-paced world of financial reporting, automated algorithms, AI news scrapers, and scrapers frequently scan corporate releases for keywords. It appears an automated system caught the word strategy, assumed it was MicroStrategy, and automatically slapped their famous red logo onto a headline meant for a completely different ticker symbol. This leaves us with two critical possibilities that we must track. The first possibility is that this truly is a massive new financial distribution strategy by MicroStrategy itself, and the automated text bot simply made a typo by writing STRC instead of MSTR. If that turns out to be true, the implied buying pressure could trigger an absolute squeeze on MSTR stock. The second and highly probable possibility is that this news belongs strictly to the company trading under STRC, and the system accidentally glitched the MicroStrategy logo onto it. Thousands of uneducated traders will buy into the wrong asset today simply because they looked at a logo instead of verifying the ticker symbol. This is why I constantly remind you on this channel. Always verify the data, look past the headlines, and check the actual corporate filings before moving your capital. So what is our ultimate takeaway from this chaotic situation, and how should you position your portfolio moving forward? First and foremost, a $1 billion buyback authorization paired with a 12% payout is an incredibly explosive dynamic, regardless of which specific corporate entity is crossing the finish line. This news has already triggered a massive influx of volume, and we can expect intense volatility over the coming trading sessions for both tickers involved. I want to hear from you now. Do you think this is a massive algorithmic glitch by an automated news aggregator? Or is MicroStrategy preparing to unleash a structural corporate change that will redefine how companies manage their cash and crypto treasuries? Drop your thoughts, theories, and any real-time data updates you have in the comment section below, so we can keep our community ahead of the curve. If you appreciate this rapid, deep-dive audio investigation and analytical breakdown, please leave a quick thumbs up on the video. It truly helps support the channel. Keep a close eye on the tape, protect your capital, and I will see you in the next major financial update. Until next time, take care. This is not financial advice.